Alright guys, so if today is the first time you are coming across my video, I want you to click on the subscription button and also turn on the notification bell so that you'll be notified whenever I drop a video like this. So on today's video, I'm going to be sharing you the strategy that I use in covering up my losses throughout yesterday and day before yesterday on my prop firm account. So for those of you that knows me very well, I trade more of JPP JPY. So throughout yesterday and the day before yesterday, I think JPY have been giving a lot of consolidation, and I've not seen any clear trend, any clear volatility, no opportunity, just wavering around 198,500 and 19900. So I was like, wow, this thing is so frustrating, and this is the only pair I trade to. Though I was really worried because the two trade I've taken yesterday and the day before yesterday, I lose all of them. Like I literally was I was feeling bad. I felt bad so much. So I just okay, let me just stroll down to Euro USD. So on Euro USD, I was just like seeing some kind of nice trend, nice movement on the market. So I decided to make some analysis on Euro USD. So on Euro USD, I found out that from the 4 hour time frame, as you can see, the market was trending to the upside. And I see some kind of key levels, so I have to mark out these key levels as you can see on the chart throughout my valid trend line. And looking at the current channel line, you can see from the 4 hour time frame. Let me zoom this out. You can see how clear this is the current trend of the market, which is bearish. I actually took this trade. You can see clearly that I took this trade to the downside. Now I'm going to be telling you how and why I took this trade. So from the after making my analysis from the 4 hour time frame, I scaled down to the 1 hour time frame. Now before entering every trade, I always make sure I get a candlestick confirmation. Now first of all, price was at this level, which has been finding it difficult for like 2 to 3 days. Price have been reacting to this support level, which is this point here. You can see price have been reacting at this point. So looking at this, I realized that today was CPI. So and we are in the New York London New York session, and you know how it is whenever the New York session is opening. So price moved from this point to this point, New York session. So I would have taken this trade, but I would have only cashed this trade at the Asian section. So based on the fact that I trade more of GBP I'm more focused on GBP. I wasn't here to monitor Euro USD. I told you guys earlier that I only came into Euro USD today when I realized that there's no opportunity on GBP, which later GBP start flying, which I'm going to also show you guys in this video. So I'm going to be making this video short though, but I'm just going to at the same time make it very quick. Now you can see how price have been trying to was eating around this point and was unable to break above it. Now the reason why I took trade on this pair is that from the overall trend of the market in the 4 hour time frame, it's giving me a bearish vibe. The market was falling to the downside. So with that mindset, I already have it in mind that this market is going to sell. So I waited for a confirmation at this resistance point. Now what had the confirmation? My confirmation criteria I only met at the 30 minutes time frame. Now at the 30 minutes time frame, I waited for price to get to my support level, which price gets to my support level, and when price just tapped into the support level, I waited for the bearish candle to be created. Now where is the bearish candle? Now if you look when price tapped into the support line, if you look very closely, you see that the bearish candle was created after this bullish candle. Now when a bearish candle is created, what do? I always want to look at the candlestick confirmation from the 30 minutes time frame before I go to the 15 minutes time frame. Now from the candlestick confirmation, guys, I want you to pay very close attention to what I'm going to be showing you right now, because it's very important. Now looking at this point, you can see this is a bearish candle. Look start from the starting of this triangle line that I just created. Look it from the starting, you can see that I draw it below a bearish candlestick pattern. Now at this candlestick pattern, what am I now looking for next? What I'm looking for, I want price to break up below this candlestick pattern and give me a close candle. Now here's the close candle. This is the close candle. This is the close candle here. This is the candle that closed below this candlestick below this candlestick candle. Now this candlestick candle serve as a support and resistance. You can see why the ICT people call it order block, but well, this is actually the starting of an order block, but I always use this as a support and resistance, as a minimum support or resistance, that if price break below, it shows that the market has changed its trend to the downside. Now after seeing this, what I did is that I scaled down to the 15 minutes time frame. Now at the 15 minutes time frame, for those of you that have been following me very closely, you will know that at the 15 minutes time frame, what I normally look out for is the hem pattern at a resistance or a W pattern at a support. Now, after the M pattern have been created at the resistance, what I look out for next is that I look out for my moving average to break. Now, some of you say that indicator is not good, indicator is this, indicator is that. But I have to tell you, indicator is actually good, but you don't have to trade indicator alone as a price action trader. Now, indicator is actually good for confirmation. Use it to it uses to advance to give you more confirmation before you go into any entry. Now, I'm not telling you that I'm using indicator alone to trade. Now, you can see that after my analysis from the 4 hour time frame to the 1 hour time frame, it's all pure price action trading. It's all price action analysis. Now when it comes to confirmation, I look at other criteria from the 30 minutes time frame before going down to the 15 minutes time frame. Now at the 15 minutes time frame, as you're going down to the 15 minutes time frame, now I want you to take note of this level, this rectangle resistance that I draw here. Now let's go to the 15 minutes time frame. Now at the 15 minutes time frame, I told you guys earlier that I look out for the M pattern. Now this is the M pattern that was created, price created one first leg and second leg, and this is the break below. This is the break below. Now when I saw this break below, and you can see my candlestick and see how price break below my moving average. This is the moving average. Price just break below this moving average. Now after I see this break below this moving average, I want to see a candlestick close below this moving average. Now I don't want you to see this as something that is very complicated. It's not complicating. It's just something you have to practice. You have to watch this video and rewatch this video. With this, you're going to be getting exactly what I'm trying to explain in this video. But if you just watch this video only one time, I tell you it might be a little bit complicating for you. So I want you to watch this video and save this video and rewatch this video later. It's going to help you a lot. So you can see how price created this M pattern at the support. Now I want you to know one thing. Before taking any entry, before entering with the M pattern or a W pattern, make sure this M pattern or the W pattern is graded at the support or a resistance. If it's at the resistance, make sure an M pattern is graded. If it is at a support, make sure the W pattern is graded before going in to any trade. Now because if you just want to take if you want to take trade, you just want to take trade at a random level, I think you're going to eat so you're going to blow your account. So make sure you take it at the zone, at the resistance or support zone, so as even though the market hit your SL, you know that there was a reason why you take this trade, not just taking trade anyhow. So with this, I already knew that price giving me this pattern and breaking below, whether price hit my SL or it doesn't hit my SL, I know that I have a reason why I took this trade, and that is the best thing you should do as a trader. Now when I saw price break below this level, I entered for my position, which I entered for a sell at this point. And my SL was a little bit above this point here, above this resistance here. Yes, this is where I put my SL, and I was actually targeting. And remember this guys here is just a minor support level. It's not a support level from the 4-hour time frame. So any support or resistance that I draw from the 1-hour time frame, I call it the minor support level. So any support or resistance I draw from the 4-hour time frame is the major support level or resistance level. So when I saw this level, I just draw out my minor support level, and I enter my trade. I was actually targeting this point, but because of this minor support level, because most time price can just come to your minor support level, and there might be some fundamental that will just push the price to react at that particular level. So what I did, I enter for the trade here, and I put my take profit here. I was in profit to this point, so as price gets to this point, I'm supposed to allow this trade to run, but I closed the trade because it was too much of emotion, and I don't like staying close to my chart, because I was really close to my chart, because I rarely trade Euro USD, and I don't really understand how market move. If it was on JPY, I would have known where this market is going to end, but at Euro USD, I'm not really sure of the market, because I don't usually trade it. I just trade Euro USD today because I saw a nice opportunity, and my strategy was activated on that pair. So because of that, I decided to take trade on this pair. So that being said, guys, this is basically the reason why I take trade every day on JPY on any pair I want to go into. So I basically look out for all these criteria before I go into my trade, every trade that I took. So this same thing that happened here happened on GBPUSD, but I'm just so lucky, or should I say I thank God that I did not take this trade on GBPUSD, because if I had taken this trade, I would have hit it SL. Now how would I have hit it SL? Look at this rejection here. This is actually a liquidity sweep. So guys, if today is the first time you are coming across my video, I want you to click on the subscription button. If you don't really gain knowledge, or you really gain something from this video, and you want to get more, and you want to get more of a video like this, I want you to just do something for me. Now just click on that subscription button, not just viewing my videos. Do good and click on that subscription button, because it's going to help me. Number one, it's going to help me improve my videos. It's going to also help me, encourage me post more of trades like this. It's also going to encourage me to go on live to analyze with you guys. It's going to make me happy that okay, I have people that I can relate with. Please subscribe to this channel. I beg you, subscribe to my channel, and also turn on the notification bell, because I'm going to be bringing a lot of forex education and many strategies. I'm going to be posting it on this channel. Thanks for watching, and peace.